Because as soon as I do that, I'm selling out on every level of integrity, and saving tax is never worth that when there's plenty of legal and ethical ways to do it. You just got to have proactive advocates for you that are tax professionals, not historians, not people that use excuses like saying they're conservative. I want an intelligent over a conservative accountant. I want someone that's aggressive within the law, not someone that's lazily staying, away from deductions. Money can be complicated. Let a nerd help you. We're here to demystify the complex nature of money by getting you answers from financial nerds and whiz kids. Welcome to Ask the Money Nerds, a weekly segment of the Wealth Labs podcast where we answer your most pressing money questions. Hey, this is Garrett Gunderson, Ask the Money Nerds, and this is the thing that I get beat up for all the time. Oh yeah, only the wealthy can build a team. You can give this advice, but how's everyone else supposed to implement it? So some of the questions that come in is, how in the world do you start a team regardless of where you're at financially? Well, guess what? Gonna answer that question today. Got the Chief of Staff Stolba here. What's up?
Hi, everyone. Good to be with you. I actually love this. This is one of my highlights of us working together.
When I call you Stolba or just doing this?
Oh.
Because you were getting kind of a big head about how the numbers were going up with you involved in it and this kind of stuff. So I'm worried about
and joking around that I'm going to start my own.
I'm going to get some contract that comes in that I have to sign, and you want higher rates or you go on strike.
Mm-hmm. And I'm going to invite you to my own podcast on my own YouTube channel one day.
All right.
Okay, let's dig in. So like you said, we have a series of questions from people wondering how to build a cohesive financial team, which this is something that people get really excited about, but feels also overwhelming. So we're going to break it down for them. So there are a lot of great people in the financial space, but building a team that works on the behalf of the business owner is more than just finding a good CPA or tax attorney.
Right.
And it's more nuanced than that. So our first question comes in from Cassie, and she says, who and when would you recommend getting on your team to help with things like taxes and making money work better for me? So let's just do a brief list of some people that need to be on a good financial team.
Yeah, on a financial team, we have the basics like a property and casualty agent that's going to help you with your car, home, and liability insurance. And then you might have that be different from like a disability insurance agent, might not be the same, right? And maybe it's hard to be an expert in all those things. Maybe somebody even helps you with your medical insurance or life insurance. That could be 4 or 5 different people. But the key is you want them communicating with each other, and you want to kind of be in the driver's seat to make sure they have the same philosophy overall. Having an accountant's helpful. If you're a business owner, you want some type of bookkeeper as well, and maybe even an attorney that can help you with your corporate structures, or maybe even a tax attorney that can help you with the tax type of situation.
And that's one where a lot of people, while they're starting out, they kind of, in order to save money or cut corners, they're like, I'll just do the books myself.
Right. Oh, I did. I mean, when I first started, I was starting in business pretty early, but I remember at 18, I've got my car care business, and at 19, I'm starting in financial services, and I used the shoebox method. I just threw receipts in there and then got an Excel spreadsheet document that I finally put together on April 14th to get to the accounting team, which was all completely reactive. And fortunately, I wasn't making a lot of money at that time. But at the same time, I wasn't creating a lot of space to save a lot of that. I didn't have a corporation set up. I wasn't paying myself properly. And then when I finally decided, okay, I got to get an accountant, but I also got to get an attorney because I'm a business owner and I should have a corporation. The attorney and the accountant did not agree on the type of entity and how we were going to file the taxes on that. So what that did is it created massive confusion at the IRS for 4 or 5 years, where I had to change the name of the company, set up a new entity, and get a different accountant that actually would communicate and work with my attorney. So I get it. This can be really complicated. And what we do at Wealth Factory, I mean, we've gone through and built what's called the virtual family office. So the term family office really comes from the Rockefeller family, which they had their own financial team that only worked for the Rockefellers, hence the Rockefeller family office, right? So they got their own accountant, they got their own attorney, they got their own risk management people, they've got their own, investment advisors just working for them. Now, if you're worth $300 million, great. Go ahead and get that done. For everyone else, that's a little bit tough.
For the rest of us.
So when I was 22 years old and I see this for the first time, I get fascinated. Like, this is amazing. I'm sitting in a meeting. There's a conference room table. There's all these people, and the client's not even in the room. And there's someone pitching the strategy, and they're picking it apart to make sure it's going to work and how it all integrates. And at the end, I'm like, what was that? He goes, oh, that's a family office. Now, a lot of family offices might take on 10 clients now or 20 clients, or there's things like a virtual family office that might take on 100 clients, right? They're not limited to just, one family. So they've taken that same concept of getting everyone under the same roof so it's cohesive and it's comprehensive and coordinated, and it creates a massive advantage. So I see that at 22, and I'm like, you know what? I'm going to build this. I'm going to build this not for the ultra wealthy, because they called that a low tier firm working with $30 million or more. I'm like,
30 million was low tier.
That was the low tier family
Oh
office.
my.
I was like, okay. I was like, well, I'm 22 years old. I'm like, who do I know that's worth $30 million? You know? So I decided I'm going to build this. Now, it took me 13 years because I had to go out there and find people that subscribe to the same philosophy, which means I had to develop what the philosophy was and uncover that.
Yeah. That sounds like the hardest part of the process.
I created a 42 question application. I created questions to ask each person unique to their specialty. In addition to those, had to create an interview process, had to get them all unanimously voting for each other, had them read certain books so that they all kind of saw my level of thinking, including Killing Sacred Cows. And then, you know, it takes 9 or 10 months to vet them and have them go through my stuff or my chairman's stuff before they ever met with a client. So that's kind of what Wealth Factory does, wealthfactory.com/private if you just want to acquire a financial team. Because now we've built it for people doing $1 million to $10 million in revenue as business owners, but now we've built it for those people that are just starting a business or even employees that are making less than $1 million as long as they're making at least $100,000. Now I get it. That's still kind of just, it doesn't include a lot of people. Yeah. So I'm looking to say, what other financial people can we collaborate with? How do we create video courses? How do we get resources to people? So in building the team, let me give some of the questions that are useful for each different profession. Okay, with an accountant, that's pretty important. Now, if you're a W-2 employee and you're single, you don't need to pay a lot for an accountant. You know, it's not something that you need to go out, and you're not going to get a lot of tax advantages. But as soon as you're a business owner, whether you're single, whether you're married, whether you have kids, you're making any level of income as a business owner, you have major tax advantages, and the type of tax professional you have on your team is essential for you keeping a lot more of the money you make. This is one of the best returns, is when you can plug the leaks and, you know, tip the government, which 98% of business owners are doing today because it's so complicated, right? Yeah. So the questions I like to ask them is, what's the best tax strategy you've ever done? What kind of people do you work with? How often do you recommend we meet? Would you rather see me pay $100,000 in tax or $10 million? Because if they say $100,000, I'm like, well, I had to make a lot less money to pay that much in tax than $10 million. I want them to think productively first versus, you know, restricting. I'd ask them, hey, what are the downsides of deferring tax? Because if you defer tax, we eventually have to pay it. Do you think taxes are going to be higher or lower in the future? So I want to know what they think. Do you plan on me having less money in the future? Because with inflation, I better have more money, especially with my spending habits, Stolba, you know?
Yeah, now that you can buy Amazon anytime you want.
Right? I know, this is too convenient. So these are some of the questions I want to ask. Do you collaborate? Do you work with attorneys? Do you work with something called cost segregation engineers? Because if you own a building, there's ways to accelerate depreciation, right? So I want to know about those types of things. I want to ask them questions like, do you consider yourself conservative? Because sometimes conservative means antiquated. Sometimes conservative means I'm not maximizing your tax deductions because I don't have the time. I'm too busy filing. And it's a term that a lot of people are afraid of the IRS, so that goes, oh yeah, it makes sense. I want a conservative accountant, but I want someone that's going to be...
It's a comforting term when you're thinking about something that you don't have a lot of familiarity with, you know, and the IRS does seem scary and taxes are daunting. So conservative kind of sounds like a good thing, but what are some of the downsides of having a conservative
If they're antiquated, if they're reactive instead of proactive, if they're not maximizing legal and ethical tax deductions for you, and therefore you're overpaying on your taxes, if they're not up to the newest tax codes and things that are going on, like there's been major changes with the Trump tax plan, if they don't work with other professionals, if they don't communicate with you on a regular basis. I mean, there's so many things, but the reality is just because they don't, you know, take advantage of certain things, that doesn't make you safer. That doesn't mean that you're going to be better off in an audit, or that you're not going to get audited, because the IRS wants to audit someone at least once during their lifetime. So what you want is the right tax team that will fight for you. And I'm not ever recommending someone do something like people say, hey, I know you can pay your kids $12,000 a year and it's tax deductible. Can I just pay them without them doing anything? No, it's bad. It's
dishonest.
One is, if your kids find out that, then they're going to learn lessons of entitlement. Two, if you're audited, you're going to have to lie. And I just think, why not just do the right thing? There's a chance for you to teach your kids in paying them. You still can control their accounts. You can get those tax deductions. I mean, you work with me on my taxes to a certain degree because we're looking at what we can write off for the Augusta rule, right? Which is when we rent out my house or my cabin and we're making sure, did someone stay there? What was the purpose, right? Because I don't just want to go, let's make up some dates.
Yeah.
And then we'll just say it happened.
It'll be fine.
Because as soon as I do that, I'm selling out on every level of integrity, and saving tax is never worth that when there's plenty of legal and ethical ways to do it. You just got to have proactive advocates for you that are tax professionals, not historians, not people that use excuses like saying they're conservative. I want an intelligent over a conservative accountant. I want someone that's aggressive within the law, not someone that's lazily staying, away from deductions. So there's a couple pieces there.
Yeah, I think when someone's starting to have conversations like this, how do you know that your accountant is staying up to date on all of the tax code changes? There's so many of them, and they happen so frequently. Like, how do you know that they know the latest?
Ask them if they know about Section 199A. That's a pretty good test, and have them explain it to you.
Okay.
That's a great test. The other thing is you go to wealthfactory.com/tax, and we have some really cool resources to help you to build your tax team and understand some of the advantages that are out there.
Yeah.
So that's helpful because we know there's only a certain number of people we can work with. So it's good to at least give everyone else some of the same ideas.
Okay, so we answered actually 2 questions in one: Joshua's question and Rich's question. So we're going to move on to a question from, let's see here. Okay, question: does the same thing that you've discussed apply to finding an insurance agent? So I remember going in, after learning some of this stuff, going into my insurance company, having a meeting with my insurance agent and asking questions to figure out, if the company and the agent were still a good fit for me at that time in my life. And it turns out he was a bit surprised about all the questions that I was asking him. He's like, nobody ever asked me these questions before. So some of the conversation, I got clarity around what my coverages were and what, just actually like what my gaps were as well. But I think I walked out of that conversation realizing, he's more of an advocate for this company than finding like the best rates for me and what is good for me, because he wasn't branching out into finding what are the best rates and plans for me in the whole insurance world. It was just what that company had to offer. So when someone's looking to find a good insurance agent, do you have a couple of other questions that they might be able to ask to find a good member?
So one, you want to know, are they beholden to one company or are they independent and they can write for multiple companies? Just because they're beholden to one company doesn't mean it's bad. It just means that you probably deserve looking at one more call, right? It could be that State Farm was the best company for you, but it might not have been.
Yeah.
The second thing is ask them, what can we insure that's catastrophic that doesn't cost us as much? And what things can we not insure because they're inconsequential and I can write a check for?
What's an example of something that's inconsequential?
People with no deductibles or $100 deductibles on their car insurance. So they get a fender bender, they go make a claim. They're just going to raise your rates anyway. Claims raise rates. So only use them for catastrophic things. So if you can cover the basics out of your own pocket, and look, a lot of times you're going to take them to places that the cash price is different than the insurance price when you're getting something fixed. So if an insurance company opens a folder, it automatically costs them quite a bit of money, because they're now engaging employees and those kind of things. So I want to look at what's worth the money. Where can I get more bang for my buck? An umbrella policy is a lot of bang for your buck. That's an excess liability policy that sits on top of your car and homeowner's insurance that says if you go above your limits, that kicks in. And it kicks in for all properties and all vehicles. So it's a very efficient way to insure very catastrophic things where deductible, you might have money in a savings account and you can handle that on your own. Or maybe you don't need to have your disability policy kick in until 3 months rather than 30 days or 6 months rather than 3 months because you've got enough cash on hand and that lowers your premium, or it allows you to get bigger amounts of coverage if something bad did happen. There's just people that are grossly underinsured because they're only looking at the price. And most agents are just trying to quote you a better price. But what if you're getting better price on crappy coverage, on something that if the incident happens tomorrow doesn't protect you? Then why insure it in the first place?
Yeah, it's not helpful at all. And you think of like the umbrella policies, if I'm getting an additional $1 million in coverage, you'd think that was going to cost a lot, but it's actually
a couple $100 a year,
not much,
unless you're just a terrible driver and you're speeding everywhere and you're getting caught,
backing into people's poles at the end of the driveway.
Yeah, that was the first time I rode in your vehicle. You backed into a pole. Yeah,
I did. Second week in Salt Lake City.
So the questions you're going to ask are: how do I maximize coverage right? How do I save money without sacrificing coverage?
Mm-hmm.
Is there better policy design? Is there multi-policy discounts?
Yeah.
Right? Are there things that I could do there? What insurances are inconsequential that I could eliminate? Where can I have this insurance kick in later and therefore get more coverage with the same dollar? These are the types of questions that they're not used to hearing, because most of the time they're simply looking at what you already have and seeing if they could beat the price. And unfortunately, the price doesn't determine the full value, right? Maybe there's ones you can save money and have the same coverage, and that's fine. But if that coverage is inadequate, then it didn't matter anyway. Get the right coverage and then try to design it really efficiently.
Yeah, because if you don't get the right coverage at the right price, it's going to cost you more down the road.
Right.
Yeah. Okay, so Lisa has a question in regards to adding a financial advisor to her team. So she's wanting to make sure that she has someone on her team that can help her invest, I guess, right off the bat. So how do I know that she has the right financial advisor?
Well,
and are there different questions to ask?
Yeah, and I feel like sometimes we have to make a distinction here. Is it a retirement planner or a financial advisor? I feel like there's a lot of people that are retirement planners and their main job is to help people fund their Roth IRAs or their 401ks or their, and it's all these retirement plans. But they don't look at their asset protection. They don't look at their estate planning. They don't look at their cash flow. They don't look at how their debt's structured. They don't look at their taxes. And so it takes a team. There's no one individual that can be an expert in everything. But I like to look at this format. Number one, how can you make the most money in the profession that you choose, the job that you have, and the impact that you're making? Because you want to make as much as you can by adding more value. Number two, how do you keep more of that money that you make? So how can you be efficient? How do you structure your loans properly? How do you negotiate the best interest rates? How do you have the best credit score? How do you save on tax? How do you save on non-performing investment fees or investment plan structures like retirement plans that sometimes are overly expensive? And how do you design your insurances properly so you don't have duplicate coverages or costs? Then number three, how do you grow your money? So some people go to grow their money too soon. They haven't built an automated infrastructure to pay themselves first. They haven't built up 6 months of liquidity to create staying power and safety. They haven't plugged financial leaks. And if you're doing these other things and taking risk with your cash before you plug financial leaks, then it just, like in What Would the Rockefellers Do? I did this whole segment where we wrote about what if you doubled your rate of return on your investments? How far does that get you versus plug your leaks? And plugging leaks was just getting people so much further ahead without the risk. So how do you get the right financial planners? Is one, you got to know, like, are they a financial planner or are they really a product salesman? And that's okay if they're filling that niche of just that product. I used to just sell mutual funds and life insurance, and I try to tell people I was a financial planner, but I was just a product salesman, right? So what is the role? And do they have other people that they can bring along with them that help with the other pieces and the other part of that role, right?
Yeah.
Are they more of a quarterback and a point person, or are they really a transaction person? And then I like to ask them, how do you get paid? What products do you utilize? How do you select the products that you utilize? And what kind of performance have you gotten? What kind of downside protection do you create? How do you help people improve cash flow? That's usually a tough question for a lot of people in that realm, right? So asking those questions can be really useful. And, once again, the plug is wealthfactory.com/private. If you go there, we have financial teams. We have programs like Wealth Architecture and like Freedom Fast Track and like Wealth Acceleration Workshop, where you build out the blueprint and where you have the financial team that you could acquire right there, So those are usually a little bit easier ways to do it. But then again, if you don't have the money to do that, or you're just starting out, we have tons of resources, and we give away a lot of these on Ask the Money Nerds and on the podcast and on the YouTube channel. So continue to watch these videos because they're helpful.
Yes. So before we wrap up today's segment, will you do a quick rundown of the key people that someone should have on their team?
Property and casualty insurance agent, disability insurance agent, medical insurance agent, life insurance agent. If you're a business owner, your property and casualty agent got to make sure that they can do business owner policies as well. You got to have an accountant, got to have a bookkeeper, got to have a tax strategist that's either the accountant or a tax attorney, right? If you own a building, you got to have a cost segregation engineer, which may or may not be the accountant or just work with the accountant. You got to have an investment advisor that can help you analyze and do due diligence and know how to allocate those funds. If you're in real estate, you might have to have mentors that way or attorneys that are specific to that. You've got to have some type of cash flow specialist that could have been the bookkeeper, kind of depending, or you got to get a family office, a virtual family office or family office. There's ones out there that help people. That's what Wealth Factory does. That could be, uber helpful. But where to start? How can you personally make more money? Do you have a mentor that can help you in there? Are there things that you could specifically do to invest in yourself and increase your skill set? Number two, where are those efficiency experts? Who can help you with loans? Who can help you with taxes? Who can help you with investments? And who could help you with insurance? And then you look at where to invest the money, where you might have an investment advisor, a retirement planner, or someone like that.
Yeah, keeping the right order is really important in this situation. And you may, like with all the people that you mentioned, it makes sense that you'd want to have a comprehensive team because there are a lot of philosophies and ideas around. So if people aren't aligned that way, it could get very confusing and just maybe not help you grow or scale your business in a way that you want to if you have so many varying opinions. So,
all right. Well, I'll say it this way, look, you've got to utilize experts. Don't completely rely upon them. Have them where they can make it succinct and save you time and be your advocate so that you can do real due diligence so you can see how everything works together. Make sure that they communicate on a regular basis. Start somewhere. So get your foundation handled first, which could be everything from basic protection if you're a business owner, getting your corporate structure, anyone getting their basic insurances in place to transfer risk, building up plenty of liquidity, which could just be a regular bank where you're building up enough savings and things that way. And then you're going to look at where the efficiency experts are. Accountants, people that deal with cash flow in the loan realm, which could be bankers or credit specialists. And then you're looking at investment advisors. And then you're looking at those insurance professionals I already mentioned. So, wealthfactory.com/private can be super helpful, even to give you an insight of what's out there, who's out there, and some cool resources. I actually did this thing called the Accredited Network Vault, which is interviewing 14 different financial experts, which was my personal comprehensive team, getting the best out of them. So that's something that people can learn about if they go to wealthfactory.com/private.
Okay, awesome.